Shares of Peloton are having a phenomenal day on Thursday. That's after the company named a new CEO and released their fiscal first quarter results. The results actually weren't all that good. So this is one I really want to go through and kind of explain what I think the thinking is from the market's perspective and how I'm thinking about this as an investor. A lot has changed at Peloton over the last couple of years. They went down a strategy of trying to grow their app. That completely failed. Now they've really gone to, hey, we need to sell our hardware profitably. They're doing that now. They're growing their revenue in the subscription business, but the future doesn't necessarily look that bright. So why is the stock up so much? That's what I'm going to dig into. My name's Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. First of all, I want to show the market's reaction today. I'm recording just before noon Eastern time, and you can see the stock's now up 32%, just continues to rise today. And I think the big reason is naming a new CEO. Peloton has not had a CEO for a couple of months. Barry McCarthy, who took over a few years ago, stepped down earlier this year. Pretty clear that the strategy that he was trying to lay out didn't really work. That was actually one of the reasons that I was bullish on Peloton, is I thought, hey, this could be a company that's creating fitness content, and then you can sell that to millions and millions of people. I'll get to where they are on that in just a second based on the numbers, but that strategy basically failed. So now they're moving into a new strategy. Here's somebody who comes in from Apple. That is his most recent experience, launched Apple Fitness Plus. Hard to say that that is a successful product, but we'll see exactly what he does at Peloton. Also spent time at Time Warner Cable, so has been in the corporate world for quite a while. But I think the more important numbers today is what's going on with earnings. I'm going to go down to the first thing that I always look at with earnings. On this first section is user metrics. So this is going to be the number of people who are subscribed or using Peloton services. Paid connected fitness subscribers. This is the people who are paying that higher $44 per month. They are losing subscribers at a pretty decent clip here, 2% year over year, 3% quarter over quarter. That's not the trends that you want to see. Again, this is one of those things where the market is up today, but you look at the trends for Peloton and they're not looking very good. Their churn is actually higher than it was a year ago, 1.9% from 1.5%. This is the app that I talked about earlier. This is where I thought there was a lot of potential to get a lot of operating leverage in the business. That clearly hasn't worked. Down 24% from a year ago. They basically kind of pushed that off to the side. They're not really focusing on that anymore. And that makes sense based on the fact that it didn't work. And that is partially because these churn numbers are just incredible. 7.1% churn. This is on a monthly basis. So 7.1% of customers are leaving every single month. That's just an unsustainable number for any kind of subscription business. What is going well, if we go here to connected fitness product revenue. So connected fitness products is basically just hardware sales. How many bikes, how many treadmills are they selling? That number was down 12% year over year to $159.6 million. But look at this gross margin, $14.6 million, up from $5.7 million a year ago. And the percentage is now nearly 10%. I think those numbers are really solid. This is what management has really focused on recently. They're actually increasing some of the prices of their hardware. And the idea is, hey, we got to make money on hardware as well. We can't be losing money on hardware and then try to make it up on subscriptions. We got to make money on both pieces of that. Now, it'll be interesting to see how far they push these gross margins. I wouldn't be surprised if gross margins on the hardware side stick more in this 10% range. And then can you grow from here? Can this be a $1 billion business for Peloton? We'll see, but there's at least some progress turning this from a money loser into at least a little bit of a money maker on a gross profit perspective. Where there's more solid numbers is $426.3 million in subscription revenue, and that's up 3% from a year ago. And the gross profit also up 3%. His margin is 71.7%. The other thing that I think investors are absolutely cheering today is $291.2 million in operating expenses. This is Peloton cutting costs to get in line with where their revenue and their gross profit is. So that's down 30% from a year ago. Just a crazy reduction in the amount of money that they're spending on operating expenses. That's after reductions that they had a couple of years ago as well. So this is something that continues to trend lower. The downside is you're spending less on these operating expenses. What you're paying for is you're paying for it with less growth. So you're not spending money on sales and marketing. You're not attracting new customers. Eventually, this becomes unsustainable. You got to get to a point where this number can be maybe where it is today, and they're starting to grow their subscriber base. But we're not quite there yet. So we'll see where things trend, the reduction in operating costs obviously helped out adjusted EBITDA, $115.8 million, and free cash flow that was positive again at $10.7 million. So depending on whether you're looking at the top line or the bottom line, you could see these results as being positive. But here's where things get a little bit more complicated for Peloton and where I become a little bit less bullish. This number right here is the first quarter fiscal 2025 numbers. So that was last quarter, the calendar third quarter of the year. This is the guidance for the next quarter, the calendar fourth quarter of the year. They're expecting their connected fitness subscriptions to fall 2% quarter over quarter and 5% year over year. App subscriptions going to drop, no real surprise there. But they're also expecting revenue to fall 13% year over year. Remember, this is the holiday season, so should be a little bit of pickup in hardware sales. That's not what they're expecting. Gross margin is going to be up. Again, that's based on the trends that we talked about earlier. But this adjusted EBITDA number, now that is going to be down from $115.8 million in the calendar third quarter to midpoint $25 million in the calendar fourth quarter. Fiscal 2025 outlook. So this is for the full year. Now expecting things to go from 2.98 million connected fitness subscribers down 9% to 2.68 to 2.75 million. App subscriptions expecting to fall as well. Total revenue expected to be down. Margins expected to be up, but adjusted EBITDA, we've got that 115 number for the first quarter. Not a lot of additional adjusted EBITDA expected for the rest of the year. So yes, the company has moved to profitability, but is this a growth company anymore? It's absolutely not where we sit today. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So the market is absolutely responding positively to the news today, but I think we're seeing that the top line is going to be really under pressure. You can only cut costs so much in a business like Peloton is in, and that's where we are today. Yes, it's much better that the company is profitable and generating positive free cash flow today than it was a couple of years ago. But how in the world do you value a company that revenue is on the decline? And that's where we are today. Remember, Peloton has $1.5 billion worth of debt. Even that adjusted EBITDA, the debt to adjusted EBITDA, is not an attractive multiple at about 6 times. So that's where I really have a lot of questions about Peloton's future. Seems like the growth story is kind of behind us. We don't know exactly what the new CEO is going to do, but clearly some sort of stability is going to be good at the top. But I've got more questions about Peloton today than I did even just a few days ago because of this weak guidance. And so that's what I'm really thinking about in contrast with the stock being up. But let me know what you think about Peloton's results. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.